And we have the reversal pattern, which is a diamond pattern. And diamond basically is two symmetrical triangles attached to each other. So this is some kind of a square form. We can see that the price is starting to ranging in a bigger range, and after reaching the cumulative, the highest range, it starts to narrowing again. And after creating another, we can say, triangle, the formation is broken in the opposite direction to the previous bigger trend. So as for detecting the formation, clearly we are drawing the lines along with the highs and the lows, and they should form kind of a diamond shape. So again, let's go for an example. And as you can see, here it's not a perfect diamond, but it is kind of a shape that we saw a second ago. And of course, another thing, it is on 1 hour time frame. So the reverse occurred, but the move wasn't very strong, and the price continued further to the previous move. But hey, if we would target based on this formation, this trade most likely would be also profitable, right? So what we are doing here is, of course, taking the lowest point to set our stop loss, +1 plus spread. So it would be somewhere over here. So we have our stop loss, now take profit. And in this situation, when we have, yes, clear move to the downward, but the move wasn't that very strong. You see that it is smaller than in the previous example when we talked about other formations. Therefore, it could suggest that maybe 3R would be too much to take into account while setting our take profit over here. So we can say 1R or 2R would be good for this example. So we have highest level here, our stop loss over here, and we take this this range. And yeah, 1R was profitable, 2R maybe. I would have to measure it, but it's a picture, it's not a trading view platform. I can't measure that, but yeah, you understand what I have in mind, you get the point. So let's delete that and let's go further. Next we have a Pennant. Pennant is more or less, it will be mistaken many times with the wedge, but basically Pennant is a continuation pattern, but also a wedge which is formed in this we can say not maybe shape, but in this direction, that there is a clear, what I have on mean, when the wedge or pennant is formed after a strong move to the upside and it is formed in the opposite direction to the trend, it suggests a continuation. So the pennant is differ from the wedge based on that the breakout occurs when the range is very, very narrow. So what I have on mean, the wedge would break out somewhere over here from the formation, right? While the pennant, the price range in the pennant is getting so tight that it basically forms kind of a pennant, right? So that's basically the only explanation I can give you, because they are very similar formations. The falling wedge in the uptrend and the pennant, right? So let's check an example. But the pennant rarely occurs, so you don't have to worry about that. If you will mistaken that with the wedge, it's not a problem basically. So we have a situation like here when we have very, very tight range over here. So we could even draw it a little bit different, somewhere over here and somewhere over here. It may be also not a perfect example, but you get the point what I have on mean. The price range in the edge of the pennant is very, very small, and after that occurs the breakout and the continuation of the previous move. But again, it's a cherry pick example, but you see the dependencies when they occur after strong move. You see all strong move to the upside, green candles, like consecutive, many of the consecutive green candles, very strong move, clear breaking through the previous resistance, and yeah, we have the formation, the continuation chart pattern. And as you can see, the price breakthrough retested the level before going straight to the upside. And again, what you need to have in mind while taking a trade with this formation: breaking point, stop loss at lower point, but the take profit you would measure from this distance when the lower boundary starts to form and the higher boundary starts to form. And from here you would take the range to set your take profit. And of course, again, it depends. Right here we have a very tight range of the formation, so we could target 2 or 3 Rs, but if the range would be higher, 1 or 2. But here, of course, I think we don't need to have a ruler to guess that this one was profitable as well. So let's delete that and let's go with the topic. Okay, next one are wedges. And wedges are bilateral patterns, as I said a couple minutes ago. So basically we have two types of wedges: the falling wedge and the rising wedge. The thing is, the falling wedge and the rising wedge can be bilateral. It depends on which market it occurs. If we have the wedge, falling wedge in the falling market, in the bear market, it will suggest a reversal. If we have the rising wedge in the falling market, it will suggest a continuation, and the other way around. If we have falling wedge in the rising market, it will suggest a continuation. If we have a rising wedge in the rising market, it will suggest a reversal, right? So let's go and check examples. So first example of the rising wedge in the rising market. So this is basically the confirmation my previous words. Here we have again the flag, for example. So you see what I have on mean. Pennant. Okay, you get the point. But let's go to talk about the wedge. So we have here rising wedge. As you can see, breaking point, target level, it depends of the situation. Here it was formed from, compared to the previous move, a little bit tight range. The candles had big bodies. So of course the concept is the same. You get you measure the beginning of the formation, the highest point and the lowest point, and therefore from that you take 2 or 3 R, depending on the situation. Stop loss, of course, 1 pips or 2 plus spread above the highest point, and from that you measure the target. 1 or 2, right? Or 2, for example. So again, you get the point what I have on mean. Okay, that's the example of the rising wedge. And now we have the falling wedge, and yeah, I already marked this one. Here we have the situation what I was talking about. Clear move to the upside, very strong, big bodies, long candles, indecision in the market, the wedge has been formed, right? It is clear. If we go with the highs, if we go with the lows, breaking point, measure the distance, +1 spread, +1 point plus spread for the stop loss, and from here you measure the target take profit. So yep, this one example we have discussed, and let's go to the next one. And this is the last pattern which we will talk about, but we will talk about this more broadly. This is the head and shoulders. It's a reversal pattern, and based on this example I will show you why you should look for the reversal patterns most often at the major support and resistance levels. So how it is formed? It's an easy situation, like the triple top and triple bottom, but the middle top is higher than the other two ones. So we have the clear move to the in this one, head and shoulders. We have the clear move to the upside. First top, lowest point. Second top higher than the previous one, lowest point more or less at the same level. It doesn't need to be necessary, but if something like this is, it is a perfect example to illustrate you the point. And the third one is more or less at the level of the first one. And then after the creation of this pattern, when we draw the line based on the lows, this point is more or less our entry level and the stop loss, of course, +1 plus spread from the highest point, measure the distance, and that depends on the situation, but it is a reversal pattern if you recognize it correctly and it is on a major support and resistance. You could take 3 Rs, which is 3 times more than your risk. And after reaching the 3R, I would even suggest to set a trailing stop. And I will show you in a minute why. Inverse head and shoulders, basically the same situation in the opposite direction. Clear move to the downside. First bottom, highest point. Second bottom, lower than the previous one. Highest point more or less on the level of the previous one. And the third bottom, more or less at the level of the first one. And breakout of this line. So now let's talk about the examples. So firstly, I will show you what might happen on 1 hour time frame and why it is not the perfect time frame to spot reversal patterns. So we have the clear move to the downside, to the upside, but it was the highest point over here. Previously it was going up and up, so you can imagine that. Here, clear move to the upside. We didn't make the higher high, but clearly the pattern was formed. So we have left shoulder, head, even here, and the right shoulder. So when we would where we would go into a trade, we have the lowest point first one, the second one. So we are drawing our line somewhere over here. So you can see it is a little bit bent in one direction. And of course, stop loss, pips or 2 plus spread above the highest point. Measure the distance from the entry. We have determined the stop loss, and for the take profit, of course, it depends on the situation. And 1 hour, 2 hour, this is the 1 hour time frame. So therefore, we need to have first the clear confirmation that the pattern is clearly visible, and then after setting the stop loss, we are determining the take profit based, of course, on the range of the formation and the range we had previously. Okay, that's the first example. Now let's go to the second one. And this one occurs right after the previous one. So you can see this is the moment where we fell, and we came into another support, and clearly we have first shoulder, second the head, second shoulder, and yeah, the neckline would be drawn somewhere over here. We have the first highest point, first high, and the second high. We can clearly see the head because it is lower than the other two lows. And of course we are entering at this moment, determining the stop loss, and the target depends. Either you measure it from this point or you measure it from this point. It will depend on the market situation. And in here, this is a 1 hour time frame. So as for 3 hours, we could forget about that, more like 1 or 2 hour respectively. So as you can see, the price, of course, did a significant reversal, but after that it went again to the downside. So yeah, this is because it's an 1 hour time frame. So the targets, which yeah, again I will say that the targets should not be very far from the entry point. So yeah, 2 hours, I think we could cash 2 hours based from those either this one or this one measurement. Okay, so now let's go and talk about why we should take into account why we should look for reversal patterns most often on higher time frames. So let's check this one. Here we have, this is the Euro USD. It's a current situation. This is the daily time frame. Here we have the pandemic situation and what happened after that. We are currently over here, and I want to talk about this situation because, as you can see, it is the zone where the market was very indecisive. We have the moment from which we bounced many times, broke through. There was a here is very strong indecision, was candles in both directions. Again, a market came back, went up, back again, went to the upside, went to the downside, to the upside again, created some kind of formation and bounced again from this level. Therefore, we see that it was tested many times in both directions, thus suggesting us that this is a significant level, significant, we can say even a significant whole zone. So if we go to the, let's delete that. If we go, this is a daily time frame. If we go to the 4 hour time frame, we have a situation like this. So this is the TradingView platform. So I can play with this image. So you can see it is a 4 hour time frame, and we had clear move to the downside, very strong support zone. And what happened after? Very strong reversal move. So let's discuss that. This is another example where the formation is not obvious, is not the best looking one, we can say. It's not the clearest one, but either way, we have first arm, the head, and the second arm, second shoulder. Yeah, the head and a second shoulder, and the line would be drawn in this way, or maybe even slightly, yes, would be drawn in this way, yeah, and crossover here, and we are targeting from the lowest point, which is this one, +1 plus spread, somewhere over here, and it depends here or here, but When it is a situation like this and it is a H4 time frame, D1 time frame, most likely it will be a very, very strong reversal. Therefore, we could target a very 3 hours. And as I said previously, even after reaching the 3R, I would set a trailing stop. So yeah, basically this is why, let's delete. This is why you should look for reversal patterns at the major support and resistance, because I don't want to measure it, how many hundreds of pips there is here to be taken. And after detecting such moment, what we can do scalping along the way. So yeah, that is basically why you should look for the reversal patterns at major support and resistance. And now there will be an example why you shouldn't look for the continuations pattern on higher time frames. So basically that's the example. This is a 1 hour time frame. Still 1 hour still. On the other hand, this is a 1 hour time frame, and here we have clear triangle, right? After making a significant move to the upside, very strong green candles again, but the range started to tighten, and therefore suggesting us that, hey, maybe it is a triangle, maybe it will continue. But as you can see, on the bigger picture, the continuations pattern most often doesn't work that perfectly when they are especially created along some strong resistance level. So not necessarily they could suggest the continuation, as you can see based on this example. So yeah, I know that it is a long video. I don't know if I will split that into 2 parts, but yeah, I hoped you learned something from it. Hoped it was some kind of useful for you. And yeah, hope you like this one. And remember to follow LiteFinance also on Instagram and TikTok, because I am posting stuff also over there too. So be sure to follow them there as well. And yeah, if you like this one, of course, just subscribe to this channel. Thank you for watching. Goodbye.